Hello, this is Steve Sanangelo from the SRS Rock Report with a new public YouTube video, breaking news. Something big has changed in the gold and silver market. Now, I'm not just talking about this big price move we saw today. Gold was almost up $40 and silver was up more than a dollar, but there's some fundamental changes that are taking place. I think we're just in the first stages of big moves coming, either in the price and also in more demand for gold and silver. Now, I had been warning my subscribers, my paid subscribers at the SRS Rock Report, that now this is a silver quarterly chart. Each candlestick is 1 quarter. And I said we had one heck of a bullish candlestick. And this was on Thursday, March 30th. And look, I mean, look how clean this line is here. Look at the candlesticks. They would go above it, but they would close below it. So I thought maybe we would see this break above it on Friday, but this was March 31st, the last day of the quarter, and it closed right underneath it. So the silver price closed right on the breakout area, a break above this falling trend line, and we may see a quick move to 27.50. Now, that's what we had today. Nothing happened on Monday, but today we had a dollar move. And so why is this important? Well, when something, an asset or stock, breaks above a technical level, it's a spotlight in the market and all traders come in. And that's what tends to push the prices up. And so we may see a lot of traders continue to come in to push both the gold and silver price up. Now, what is fascinating, and I mentioned this to my subscribers, that back right before the pandemic shutdown, when the price of silver was $18, there was 100,000 commercial net short position. And then we had the sell-off during the pandemic shutdown. We see a reduction in the commercial net short position, but it's been trending lower. With the price of silver at 23.33, this was the last COT report. This was as of Tuesday last week. There was only 22,000 commercial net short positions, which means the silver price can go a long way. And it's already now at 25. So we could see the net short position is very low. It can go up much higher. We can see a much higher silver price. Now, I had put this chart on Twitter, got over 27,000 views on it. And it's interesting. Today, First Majestic tweets this article by this individual who says silver creates the largest bullish quarterly candlestick in decades. And I wonder, this was posted on April 3rd. I wonder where the author got this chart from, because not many people use a quarterly chart. But if we look at the next levels, and I mean, part of it's technical, part of it's fundamental, but right here, this 27.50, this is where the next level for the silver price would be. And when the silver price closes above 35 on a quarterly basis, that's when we're going to really see the silver price move. And that may be still down the road. That's going to be still down the road. I talk about that to subscribers, but this next level is 27.50. And we can see that too. This is a monthly chart. We can see the breakout really clearly here. So for the silver price to continue to remain in a bullish trend, it must close above the symmetrical triangle on the last day of April. So it must stay above this, because if it closes down below this, this could be stuck, continuing to be stuck below this until it breaks out again. Now, I had mentioned also to subscribers on March 31st, did we have a triple top for gold or another breakout? So what's interesting, we see gold back in 2011 was going up perfectly, this rising trend line. It broke below it, went up, it retested it, and then it sold off. Well, we see gold took off during the pandemic shutdown. It came down, it started trending up this line, broke below it, and it retested it. And this is the 2000 level, and we had the breakout on Tuesday. So gold breaks above the 2000 level. And again, especially we can see much higher gold and silver prices due to more problems. And I think we're going to see more banking contagion in the weeks and months ahead. And what's interesting for gold, This is the commercial hedgers position. It was about 200,000 net short positions. But if we go back and look here, this is the price was 1292, 1300, about right here. And then when the gold price sold off, it got down to lows. It was at 17. Well, it was at 1972 on Tuesday before the price started to take off. So we could really see the gold price shoot up again. There's plenty of room for it to go. Now, what are the fundamental things going on? There's a lot of problems in the financial markets. The Fed and central banks really, I don't think they're going to be able to contain this banking crisis. It's going to get worse. And so, but what's interesting, we had the 2009 financial crisis. We see a huge increase. This is U.S. Mint, Gold Eagle, and Buffalo sales. This is January and March 2007 to 2023. This is troy ounces. We each the first quarter. And typically you get a lot more sales on January, the first year the new coin comes out. But what we could see in 2009, we had a doubling, more than a doubling of demand during the financial crisis. But it remained in a trend bound, and then it really declined in 18 and 19. The pandemic shutdown, we had 306,000 ounces of Eagles and Buffaloes. Look at quarter one, 2021, 523. Look at quarter one, 2022, 581, and now we're at 587. 587,000 ounces. That's more than 500,000 ounces of Eagles and Buffaloes sold in the first 3 months. Now, what's fascinating about that, this was full year 2017, 18, and 19 of the Eagles and Buffaloes. Look at this. And look at, we could see it starts to move up in 2020, but these 3 years are higher than 17, 18, and 19. So I think we're in the beginning stages of demand for gold and silver due to the increased problems we're going to see in the financial industry, in the banking. And this is all coming due to the energy, which I talk about at the SRS Rock Report. Now, if we look at total global official silver coins, 2007 to forecast to 2022, because the World Silver Survey has now come out with the data for 2022, it hit a record high, 154 million ounces. Now, get this, before silver started to ramp up in 7 and 8, look, we had 45 million, 69. During the financial crisis, we had 81 million. And then it continued higher because more demand for the higher price. And then it sold off. We see we didn't get much demand here. I'm not saying sold off. We had less demand, just like we had with the Gold Eagles. See? Oh, Gold Eagles and Buffaloes. The sales really had fallen in those years. But look where we're at now, 154 million ounces of just silver eagle, just official coins. This isn't rounds, private rounds, or bars. And I think we're going to see 165 million ounces for 2022. What has changed fundamentally? It started in 2009 with the financial crisis. A lot more gold buying, a lot more silver buying. It fell in 17 and 18, started picking up in 19, and now I don't think we're going to go back to low levels like in 17 and 18. There's too many problems now. And so I think we're going to, I don't know if the mints and the industry is going to be able to produce enough bullion products when things really start to get in trouble in the banking system. Now, to subscribers, I wrote about get ready for serious inflation in the future. Energy, not money printing, is the main factor in rising consumer price inflation. We need to understand rising M1 money supply pushes asset values up, stocks, bonds, real estate prices. When you get surges in the oil price, that pushes up the consumer price inflation. And we're just in the beginning stages of huge moves in the consumer price inflation and energy. Now, this was the chart that came out by the Bureau of Labor Statistics. We see the peak of the inflation, CPI, hit about 9%, and it's been coming down. Now, people say that this is due to the money supply. Well, let me show you. We've got the money supply. It definitely moved up in the green during the pandemic shutdown. but the CPI rate of change is in the red and the West Texas oil price is in the black. Now you tell me which is more. The money supply grew here very slowly, but look at the oil price. And then look at the CPI change. Came down, went back up, went back up, went back up here, went down. Now, if we look at this next chart, I have overlaid the change of the West Texas oil price from September 2019 to February 2023, overlaid it with the CPI 12-month percentage change. Do you all see a correlation there? That has nothing really to do with the money supply. Really, it has to do with the massive energy cost push inflation. And again, we're going to see much, much higher energy prices. So even if we go back to the 70s, we had the big inflation. Here is the money supply growth, but this is the CPI change. Why do we have these big peaks in the CPI change? Well, this is the CPI. I mean, this is the money supply growth right here. It's going up. And guess what? This is the oil price. And that's the reason why the gold and silver price surged during the 1970s. Really had less to do with the money supply, and it had more to do with the surging oil price. Went from $1.80 to $36 in 1980. Well, the money supply only tripled. The oil price went up 20 times. 20 times. So basically, I'm showing you the increase in the consumer price index, which is in yellow. And this is the oil price. And this is what's driving the consumer price index, is the surge in oil prices. Now, unfortunately, back in the 70s, because the United States had a lot of coal, the rest of the world used a lot of coal. Coal was very cheap. And so our electricity costs were very low. Well, guess what? This is natural gas delivered to residential consumers in the United States. Look at the high in August 2022, 25.52. It's a new high, highest high, and the low is even high, 14.74. And unfortunately, this is just the beginning. We're going to get into a lot of problem with natural gas and electricity prices. So not only the oil has been the major inflation driver in the 70s and recently, and now it's also going to be electricity, natural gas and electricity. Way too, unfortunately, people, Americans and Europeans around the world are going to be paying double. Well, the Europeans did already. Way too Americans going to be double their electricity prices. This is going to be very inflationary as well. So, folks, things have changed, and they're changing under the market. And this massive increase in gold, Eagle, and Buffalo sales is still with mostly diehard precious metal investors. Some new investors. Wait till you start to see a lot of new people move in. There's just not going to be the available supply. That's what's going to push gold and silver to much higher prices. So something big has changed in the market is this banking crisis. It's all due to the energy, folks. The energy is disrupting the market, and the Fed and central banks are trying to react to it, and they can't. You can't solve an energy crisis that's coming with paper. So I hope you enjoyed this. If you have not yet subscribed to the SRS Rock Report YouTube channel, please consider doing so. Thank you.